Okay, everybody, it is me, Gregory Mannarino. This is my newest segment of Markets and Look Ahead. It is Sunday, July 24th, 2022. People, this is a big week. A lot of stuff going on. Number one, we got the ultimate freak show. And I mean that, the ultimate freak show. That is the Federal Reserve. This week, it is widely expected the Fed's going to raise rates again because they're so committed. They are absolutely committed to preventing inflation from surging even higher. But this is just a big lie. And I'm going to read something to you in just a little bit. I think you're going to want to hear. All right, so with that, yes, Fed week, it's going to be interesting. Let's see how that plays out. We got a bunch of economic reports, including one for gross domestic product second quarter. Well, it's widely expected that this is going to be, wait for it, negative. Oh, negative GDP. But how can that be if we're doing so great? Our economy is fantastic and it's tremendous. You can't make this stuff up here. Also, a big week for earnings. But does that matter? I don't believe it does in the current environment between what the European Central Bank is doing and what the Federal Reserve is also doing. And it's in our face. Earnings don't matter. Forward guidance don't matter. PE ratios don't matter. Nothing matters. We are in a new debt hypercycle. And I want to, like I said, cover something with you in just a little bit. But let's go back to this market just for a moment here. If you follow the MMRI, Mannarino Market Risk Indicator, right on my website, traderschoice.net, link in the description of this video, you will see that we have fallen substantially. We're nowhere near orange anymore. So risk in this market is dropping. Now you can see the effect in the stock market. Stocks are going up here as the 10-year yield is literally cratering. How is this happening? How is the 10-year yield falling like this? What's driving it and what can we expect moving forward? Well, now I want to read something to you. Now, I want you to have a copy of this. I'm going to read this to you and I'm going to cover it. And I want to, throw a few little highlights in. But there is a link to this document in the description of this video. Feel free to make a copy of this. Feel free to share it wherever you want. Now, so I wrote this yesterday and I think it's important here. So title, are you ready? Are you ready? A new debt hypercycle. That's really what we're in right now, people. There's something going on that is getting virtually almost no media coverage. Imagine my shock. How is it that they're hiding something this big from people? Well, it's always the same story here. They don't want you focusing on the important things. They want you focusing on nonsensical dog shit. And that's just the way this is. Anyway, so here we go. A new debt market hypercycle. Listen to this. In what may be one of the greatest lies ever sold to an unknowing public is yet again another off the Richter scale debt hypercycle mechanism, unlike anything which has been seen before, all in an effort to keep the global debt-based central bank system going. You know how this works, people. Debt must relentlessly be expanded on. And every reason you can think about and things you can't even imagine are going to be thrown at us to keep the cycle going. That's the backbone of the debt-based economic model. Now, this new debt hypercycle got started just last week when the European Central Bank began an unlimited bond buying spree, which has now expanded to every single area of the Eurozone. Consider what this means for a moment. For the European Central Bank to purchase an unlimited amount of Eurozone bonds, the ECB must create an unlimited amount of euros to do it. Makes sense, right? They can't just say it. They have to actually create euros out of nothing and then go out there and buy unlimited amounts of debt. All right, now I go on to say this is a process which is massively inflationary. People aren't allowed to know this. Okay, consider this. When any central bank creates currency out of thin air, how does the newly created currency achieve its purchasing power? Have you ever thought about it? Well, here we go. It's simple. When a central bank creates currency, for the new currency to have any purchasing power at all, it must steal a fraction of a fraction of a fraction of purchasing power from every single other previously created bill. And each one of those created bills had to steal purchasing power from the existing bills that came before it. It's an incredible system. Therefore, as the money supply grows, collectively it loses purchasing power, and this creates inflation. Can I get a duh? Maybe a double duh, please. Okay. Simply put, when a central bank makes currency, it will now take more bills to purchase the same amount of goods. Makes sense, right? Now, just this past week, the European Central Bank raised rates, I'm laughing, all the way up to zero. Yes, zero from negative. Pay attention to this part. The mainstream narrative is this: even though, according to their own numbers, Eurozone inflation is close to 9%, by raising rates to zero, this is somehow going to tame inflation. I go on to say, well, not only is this impossible, but the European Central Bank is also guaranteeing higher inflation. Absolutely. Does it make sense to you that they can raise rates to zero in an environment where inflation is surging at nearly 9%, and that's supposed to tame inflation? How does that work? Oh, it doesn't. Unbelievable, people. You can't make this stuff up. It's impossible to do. Okay. So anyway, I go on to, you cannot raise rates to zero in a nearly 9% inflationary environment and expect inflation to slow down at all. In fact, you're assuring higher inflation. Moreover, the European Central Bank now having to create unlimited amount of currencies to buy an unlimited amount of bonds, much higher inflation is guaranteed. Okay, pay attention to this part. In the U.S. markets, yet another phenomenon is occurring. Bond yields are dropping precipitously. For bond yields to drop in their current fashion, some entity must buy the debt. This would have to be an entity with unlimited firepower. How about the Federal Reserve? Okay, the Federal Reserve is buying it all right now. You're not allowed to know this. They're doing the same exact thing. In fact, they're following the European Central Bank's model here of buying unlimited amounts of debt. Now let's move forward here. Central banks possess the ability to do one thing, and that is manipulate debt. By manipulating debt, central banks can artificially create an environment of risk, that is, push cash into equities or the stock market, or push cash into risk-off assets like commodities. The premier way, or the number one way, in which a central bank can inflate both the stock market and real estate markets collectively is by artificially suppressing rates. Central banks suppress rates by means of buying debt. Henceforth, what you're seeing with the ECB and the Federal Reserve following suit, although you're not allowed to know that. Central banks have used quantitative easing or artificially suppressing rates / buying debt ever since the 2008 global financial crisis, in what has been a very successful scheme to reinflate both a stock market bubble and a real estate bubble. The same mechanism is going on today, but on a much larger scale. Both the European Central Bank and the Federal Reserve are, make no mistake about it, fully engaged in another round of quantitative easing much bigger than before. This new QE cycle, along with the new crisis to crisis to crisis economic model, is a new debt hypercycle, which will vastly inflate global debt, the global debt crisis, to heights beyond anyone's wildest imagination. 100% true. This document is fact, every word of it. And I want you to have a copy, like I said. There is a link in the description of this video. And if you find it interesting, please share it, get it out there. People, I don't believe there is anyone really that has a better understanding of the current situation and why it's going on. What are central banks effectively doing? They are trying, or they're desperate to create more debt created out of thin air as they inflate this global debt bubble. But what they're really doing here is pushing off what you already know is coming, a liquidity crisis on a biblical scale. This system here is dependent on more debt. Every day, it's relentless. It can't stop. You all know that. The moment we stop, you see, I've said this before, but I don't think it sinks into a lot of people. If we were able to prevent, let's just say, the Federal Reserve or the European Central Bank from issuing one extra fiat bill, just one, not 10, not 100, not a million, not a billion or a trillion, just one. That's it. We end the reign of central banks. That's how they have their power. Their ability to issue debt is their only strength. Now, if we were able to take that away, we win. But we have not had a world leader strong enough to do that. We will never have one, because every single president has become a puppet. World leader has become a puppet of their central banks, because the central banks control the entire financial system. Do you know how much power that gives them? It gives them unlimited power. And they have become the government. And I think you all know that. Anyway, so with that said, like I said, big week here. Is the data going to matter when you have central banks buying it all? Probably not. But it's going to be interesting to see how it plays out. The environment right now, with risk dropping in this market, again, look at the MMRI, Mannarino Market Risk Indicator. Link in the description of this video. It has dropped. Cash is making its way back into the stock market as bond yields continue to drop. And who's doing that? Well, I think I just gave you a big clue. Who's causing this to happen and why? All right, people. Look, with that said, I'm going to let you go. I hope this makes sense to you. Let me know if it does. Please comment. I will read the comments. I love reading the comments. I learned a lot from you. I really do. We're a team. This is a family. This is a global family with a couple of 100,000 people involved. I love this. I really do. And I love all of you. I'm going to let you go. Enjoy your Sunday here. I will see you in the morning, and we'll just start off the freak show like we do every freaking Monday. See you then.